So Amazon stock tumbles after reporting earnings, and although the earnings per share were actually beat, the revenue did come in a little bit lower than what was expected, causing the overall stock to actually sell off nearly 7% after market hours. But it's not even the earning report, it's the guidance, the outlook for Q3 of 2024 that sent stocks flying, not flying, falling lower even for longer. And I want to explain exactly what we mean by this. So let me go ahead and quickly share my screen. I've said this before. Again, one part that is important is beating market's expectation. The forecast, the earnings per share, and the revenue. So revenue was missed, earning per share was beat. With that being said, its guidance was off for Q3 of 2024. And this is the part that's kind of challenging for newer investors or newer traders to understand. So I want to make sure that I dedicate a little bit of time to this. What happens is that, yes, we are focused on Q2. That is what Amazon is currently reporting earnings on. But investors, as many of you guys should know, they're always thinking about the future and they always have very high expectation. In this example, they expected Amazon to be at 158.43 billion for the up and coming quarter. And Amazon guided that it was going to be right around 154 to 158.5, which was simply just a little bit lower than what was expected. But everything about what Amazon actually reported year over year is actually not that bad. I mean, feel free to do your own due diligence. When you look at Amazon stock, it looks like, again, it sold off 6% after market hours. It's trading at lows of 171.40 during the aftermarket trading session. If you look at this on the day chart, it doesn't reflect it yet on the chart because the market, all of this movement happened after the market closed. But this would put Amazon right around down here, very, very close to the moving average. That is super exciting. Finally, deals are presenting themselves. I mean, that's the way that I look at it, right? Deals are presenting themselves. You don't have to buy now because it doesn't look like the market has established its support yet. But this is really exciting because now there's actually money to be made. We can buy into the dip if it finds its support and then begin to make money as the market recovers. Finally, rather than buying at all-time highs and hoping that the market goes higher for longer. With that being said, well, what exactly was reported? This is what I want you to kind of do a little bit more due diligence on. What was actually said that maybe scared away some investors? So the report wrapped up a big tech result that flashed warning that investors have limited patience for massive AI spending. We saw this with Google. We saw this with Microsoft. A lot of these companies are massively investing into AI, but they're not seeing the return right away. They're not doing horrible. They're just not seeing the return right away. And this is kind of rubbing investors or Wall Street the wrong way, which again, shouldn't really surprise you. We've said this before where any expectation or forecast is normally overhyped or overly priced in. And this is why when you see Nvidia and all of those AI companies excessively gap up, it's never a bad idea to understand maybe when to be lighter on your position to anticipate that pullback, because what goes up very quickly normally corrects itself very quickly. So the way that I see this is that it's kind of just bringing back the market down to reality. That's truly the way that I see this. There's a lot of hype that has been priced in that the market was going higher for longer for, the past few months, and no one was asking any questions. But again, if you're part of my LPP team, if you watch our live trading sessions, we were always just scratching our heads of like, oh my goodness, like this is great. I mean, direction is bullish, but for how long can we tolerate this before the market begins to pull on back? Nothing about what Amazon actually reported was necessarily bad. If you guys can see the overall expectation of the earnings per share, Amazon reported $1.26 for the earnings per share versus the estimate of $1.04. But yet investors focus instead on the weakness of the report. So again, Amazon generated $148 billion nearly in revenue, which was a touch below $148.8 billion that analysts expected. Again, a slight little miss, but it failed to impress. And then it goes a little bit more into year over year, where you can see that there is continuous growth when it comes down to its AWS ranked 26.3 billion in revenue compared to 26 billion, which was what was expected, and 22.1 billion, which was what it did last year. So year over year from 22.1 billion to 26.3, it is growing. But again, it is simply not growing in that AI space as quickly as Wall Street expected. And that's not Amazon's fault. That's Wall Street's fault. And that's what I want you to understand about all of this, is that sometimes a lot of hype just gets factored in advance, and we just kind of have to roll with it, right? This is why when markets go higher for longer and they become very overbought, I always try to remind beginners of like, hey, have a plan B if markets do begin to pull back. Just make sure you're not so heavily invested that you can't tolerate those pullbacks. There's nothing wrong with partaking with that bull run, just knowing that if things look like they're too good to be true for a short period of time, don't be afraid to take profits and know that pullbacks are inevitable. It's not about an if the market will correct itself, it's simply a when. So with that being said, again, that wraps up the overall big tech when it comes down to earnings. If you guys have any further questions about this, I would love to answer it for you. And that's going to be down in the description or in the comment section down below. Again, if you want to be able to watch me trade live as soon as tomorrow when the market opens, that's going to be that second link in the description down below. You can sign up today and watch me trade live as soon as tomorrow by the time the market opens. Appreciate your time. Hope that earned your thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take care, team.